Hello and welcome everyone to Gold Asset of the Day for the 31st of March 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know here as we head into a new week? As we discussed in a lot of detail last week, we saw the biggest breakout for gold that we have seen essentially in history. So gold, the breakout that we saw last week above 1,650 US dollars per ounce, in fact, was the biggest percentage and dollar move we've ever seen on gold. Not only that, palladium last week as well broke out over 30%. Platinum from the lows last week broke out over 25%. Silver as well broke out over 15%. And gold, of course, has broken out over 12%. Now, we mentioned this before. Right now, the markets are providing opportunities to derive very fast income from positions like we've never seen before. So the sort of returns that we're seeing on the markets right now could typically take several weeks to generate. But right now, moves, for example, on the metals, where if you combine all of those percentage moves together, which is effectively over 100%, moves like this that can take several months to generate right now are happening in the space of just a single week. And it's worthwhile bearing in mind, particularly for those of you, you might have more time on your hands right now. You're working from home. You're looking for opportunities to, of course, generate high income online right now. And there couldn't be a better place to look than trading. So even with these challenging market conditions right now, we are able to very successfully navigate these markets, generate returns fast. And you, of course, want to be looking at very closely the commodity markets. I'm sure you're aware gold prices, the futures market, broke out towards 7-year highs last week. We've seen already palladium over a 7,000 point move in the latest week. Platinum, we of course caught that long position last week for over a 600 point breakout. We caught the 1,500 point move on gold as well. Silver, from a percentage point of view, big move last week after it dipped down to $11.50 per ounce, all the way back to $14.50 per ounce. You really need to take a cool, calm and collected approach to the markets right now. And as we mentioned before, day to day, there are big opportunities right now in the market. So if you miss one trade, you want to refocus and look at the opportunities the next day. The sort of percentage moves that we're seeing, the volatility day to day, these are extraordinary times to be trading the financial markets, capitalize on what we're seeing right now. And of course, trading, like no other industry, is recession proof. So you have the opportunity day to day to generate revenue, to generate income fast in these markets, particularly with the volatility that not only are we seeing on the metals, but we're seeing that on the dollar. We're seeing this in the energy markets, which I'll go through in more detail on oil asset of the day. The sort of returns that we're seeing right now in the markets, the speed at which they're moving, is really presenting some very lucrative opportunities at the moment. So again, this comes down to having a research-driven approach in the markets, not using outdated technical strategies, but having an edge in the markets where you're looking at data, intelligence, research, cycles, and this will help you a lot to navigate the current financial climate. So with that, gold, what are we looking at right now? Gold at the moment is trading at 1,605 US dollars per ounce. It is the 31st of March, which is basically the last trading day of the month and also the last trading day of the quarter. So with that, you do expect profit taking, particularly after the significant gains, over a 12% move we've seen off the lows in the latest week for gold. That's exactly what we're seeing. We've broken down to 1,595 US dollars per ounce earlier on today. That's in spot price. Gold is now back above 1,600. We mentioned this on the week ahead commodity report that you wanted to look for evidence of buying at the 1,600 level. If we hold above that zone on a closing basis, I would then look for range bound trade and potential retracement back towards the 1,650 level. I'm still keeping a very close eye on that over the course of this week. So if we just see a usual profit taking for the end of the month, the end of the quarter in gold, if it holds above 1,600, again, it needs to hold above that level on a closing basis. This is where we could start to pick up momentum again and have another attempt to break out towards $1,650 per ounce. If we break above the 1,650 level in spot price, then we start to make a move back towards the 1,700 level, which is of course what gold futures hit last week. They broke out to 1,700 US dollars per ounce. Also be aware that in the latest week, hedge funds and money managers, they have added to their net long gold positions. But what's really interesting is the amount of sell shorts has been reduced significantly. So we're almost at a record now with respect to reduced sell shorts for gold. So this suggests right now that traders are not wanting to be on the wrong side of gold. If it has another breakout back towards the swing highs and breaks above the 7-year highs, traders don't want to get caught selling short a move like that. Remember last week, gold priced in British pounds, gold priced in Australian dollars, and New Zealand dollars broke out to all-time highs. And again, just from last week, from the FOMC statement where the Federal Reserve announced unlimited QE, that put a rocket behind gold prices. A lot of the stimulus that we're seeing at the moment from the Federal Reserve is certainly helping the precious metals, and in particular gold, to get that safe haven bid. So over the course of this week, there are going to be plenty more opportunities, as always, for the metals. So really what we're looking at with gold over the course of this week is that 1600 magnetic level. If gold was to close below 1600, this is where it can open up the door back down towards the 1550 zone. However, if we continue to see buying evidence on a closing basis, so if it holds above 1600, closes above that price structure later on in the session, in the close of the US session, then we can start to pick up momentum back towards the 1650 and then make a breakout back towards the 1700 zone. So that's essentially what I would look at over the course this week. Again, range bound trading on gold. Pay attention to the gold silver ratio. So that started to pick up momentum to the upside again today, which does put pressure on both silver, gold and platinum. They're pulling back right now. But again, it could just be that end of quarter profit taking, which sets up for a fantastic buy opportunity into the 1st of April, which will be Wednesday the 1st of April. So I would definitely keep a very close lookout for that. At the moment, we're seeing huge volatility on the metals just day to day, week to week. We identified both platinum and palladium as great opportunities for you just last week, and we've seen over 30% moves on both of the lows. So I hope many of you have been able to capitalize on the volatility, the huge moves that we've seen on the precious metals in the latest week. Again, this provides you a really great recession-proof way to capitalize on the markets right now. If you're at home, particularly on lockdown right now, there's no better time to learn a research-driven approach to trading the financial markets, and particularly the commodities. And of course, we'll put a link below today's report. So if you would like to find out more information about becoming a member of the Gold and Silver Club, just click on the link and we, of course, will get in touch with you ASAP. So with that, that's been Gold Asset of the Day, and I wish you good trading.